Uh, Thank you for joining the presentation on financial results in Q1. I'm Kudo, CEO of FY2024. I'd like to start with a public offering that we completed last month. Finally, we succeeded in funding 2.4 billion yen with 12.2% dilution. We strengthened our balance sheet, and it enables us to take out further loans and invest them on further acquisitions for further rapid growth. And the reason for the offering is there. We aim to grow as rapidly as possible. So after becoming a listed company 2 years ago, we funded 1.8 billion yen by public offering last year and took out loans of 9.5 billion yen. Then we invested 7.3 billion yen on purchasing 11 growing and profitable companies and gained 1.5 billion yen EBITDA per year. So in the acquisitions, our EBITDA multiple was about 5 times. By the acquisitions and our organic growth, we succeeded in doubling our sales and profits every year. And we think our equity ratio should be 20 to 25% in order to keep our balance sheet strength and take out further loans for further acquisitions. So we did a public offering last month, and we're happy with successful funding. And from now, we'll try to take out further loans and invest on purchasing growing and profitable companies more in order to grow as rapidly as possible. And this is the summary of financial results in Q1. Our sales increased about 2.7 times, and our operating income increased 2.9 times on the year. We are happy to start with financially successful results in Q1. And then I'd like to explain in more detail. This is today's agenda, includes our company and business overview, financial results, a summary of our finance and M&A investments, and our strengths and prospects. This is a company and business overview. This is our group overview. We provide our clients with comprehensive digital transformation and digital marketing services, such as you see, engineering and creative services, marketing services, and data science and technology services. Our engineering and creative services helps our clients to develop their websites, applications, digital services, and so on. And our marketing services helps attract customers through digital ad and social media. And our data science and technology services helps convert users to loyal customers and manage customer relationships. And we have a lot of services, but most of our services are provided directly to our clients, and most of our revenue is monthly recurring revenue. So I think our revenue is very stable. And we are supporting more than 2,000 clients, including mainly commerce, travel, and financial sectors. And this is our company's history. Our company was founded in 2006 as a digital consulting company and expanded into our SaaS as we called a technology business in 2013. Then we became a listed company in 2021, and we have acquired 11 companies and businesses in order to grow rapidly. This is a company overview. Our sales more than doubled, and our profit increased 5 times last year. And we have 6 subsidiaries and 160 employees. Let's move on to our financial results in Q1. Our sales revenue and operating income about tripled on the year. Our sales revenue reached about 1 billion yen per quarter, and our operating income reached more than 300 million yen. These are our record high figures. And our gross profit and EBITDA also increased at a high rate on the year, despite temporary costs like M&A costs. And we've already doubled our sales and profit every year over the past 2 years. And according to our earnings forecast in this year, we expected to double our sales and profit also this year. And we've made good progress in our financial performance, revenue, EBITDA, and so on in Q1 to our earnings forecast. And this is an investment and growth strategy. I'd say it's important to reduce capital costs and improve our EPS at the same time. So we've tried to take a loan fastly and invested it on the acquisitions. And after improving our performance and market capitalization, we should offer equity finance in order to strengthen our balance sheet and get further loans and further acquisitions. So in detail, so after becoming a listed company in the end of 2021, we gained a 1.8 billion yen loan and invested 2 billion yen on our acquisition and gained 0.4 billion yen EBITDA per year in 2022. Then our market cap increased to 10 billion yen. So we got 1.8 billion equity and 7.3 billion yen loan and 1.1 billion yen EBITDA per year in 2023. So our EV/EBITDA multiple on our acquisitions have been about 5 times on average. This debt-equity ratio and EV/EBITDA multiple have been our key figures. And then we gained 2.4 billion yen last month through our public offering. And from now, we try to take out further loans and invest them on further acquisitions to grow rapidly, favorably at the same or better rate. This offering purpose is to strengthen our balance sheet, as I referenced, and accelerate our acquisition, as I mentioned. We think our equity ratio should be 20 to 25%, and the ratio became less than 25% in January because of our M&A and taking full loans. So we decided a public offering. With acquisitions and our business's organic growth, our sales revenue, operating income, and EBITDA have doubled every year, and we'd like to grow rapidly by using money that we gained by this public offering. And of course, certainly a number of our shares increased by our public offering last year and this year, but our EPS has increased every year. So we'd like to make the same or preferably faster growth from this offering. And this is a review of our M&A acquisition in 2 years. There are 2 phases in our acquisitions. We became a listed company as a marketing SaaS company in 2021. So in 2022, we got 5 SaaS businesses to strengthen our SaaS business and increase our clients. Then in 2023, we got related adjacent businesses such as creative, marketing, and so on in order to expand our capability horizontally and improve our revenue per clients. Because the Japanese SaaS total market is relatively limited, but marketing and IT markets are bigger than SaaS markets. And we'd like to accelerate our acquisitions with the same policy and the funding money we gained. As I said, we became a listed company with only our SaaS business, and through our acquisitions, we expanded our business solutions quickly. Now we can provide our comprehensive and integrated digital transformation and digital marketing services to our clients. And of course, we've aimed to create a lot of synergy among our groups, such as product development, introducing clients mutually, M&A sourcing, recruiting, and so on. For example, engineering company Ragnarok Incorporated that joined our groups in April already has succeeded in accelerating our product development, our group's product development, and reducing development costs. In addition, marketing company Craft Incorporated have provided their marketing and creative services to FCode, our clients, and they have produced further values for our clients. And we've gained a lot of deal sources of M&A from our subsidiaries' human network. And of course, we've generated a lot of sales synergies, we call cross-selling. That means that we provide multiple services to one client. For example, this is a case of Suntory, Japanese big beverage company. And this is a case of Honda, big Japanese motorbike company, as you know. These are our successful cross-selling cases. And in many cases, after acquisitions, founders of subsidiaries leave their company in Japan. But in our company, most of the founders keep working with us. We think it is very important for our continuous growth. And actually, the founders give us a lot of new business ideas, specialized skills, and many acquisition opportunities from their human relationships, human networks. And this is our M&A strategy and targets focused on related, adjacent industries, profitable companies, reasonable EBITDA multiple in order to grow rapidly. We focus on purchasing marketing SaaS, digital marketing, and engineering companies. And we check their growth rate, profitability, recurring revenue, and client figures. And as I said, our purchasing EBITDA multiple has been about 5 times. In addition, our sourcing figures also have improved. We have a lot of M&A specialists in our company, and we can execute all the acquisition processes by ourselves. And our sourcing figures doubled last year because of a lot of M&A agencies network and many referrals from our subsidiaries network. So there are a lot of profitable, growing IT companies in Japan, and they've come to, I think, they've come to want to sell their companies because Tokyo Stock Exchange, especially growth market, isn't attractive for growing companies from a financial perspective, as you know. And in our industry, I think they're not strong buyers other than us. So we hope to get many profitable and growing companies as we did also from now. And this is market environment and our strengths. This is a problem of a Japanese DX markets. As you know, the Japanese DX market have been growing rapidly, but most of our clients are suffering from a lack of digital skilled staff. So our employees have increased about 5 times by our recruiting and our acquisitions in order to meet our clients' demand. And we have a lot of experienced marketing executives from major advertising agencies, big tech, and so on. And we also have many skilled corporate staff from private equity funds, consulting firms, and accounting firms. And of course, we should avoid labor-intensive businesses in order to be highly profitable, as we have been. So our business's core is set on our SaaS businesses and stocked marketing data there. Then this is our prospects. Then we try to increase our client figures by our organic growth and further acquisitions. And at the same time, we aim at improving our revenue per client by providing multiple products and services to one client. In order to gain more clients, improve client figures, we often hold product seminars, and also we'll hold a big conference on social media marketing. That will be one of the largest conferences in Japan. And also, of course, we also often publish our success cases of our clients and also release the news that we got a lot of hours. And we also are trying to encourage alliances in order to increase our client figures with our distribution partners for us. And we've also created a lot of cross-selling cases, as I mentioned, and you can see them on following pages. That's all of my presentation on our financial results in Q1, and thank you for listening. From now, we'd like to grow rapidly and keep profitable as we did. Thank you so much.